Today's Tuesday, January 31st, 2023, back for another daily review starting here on the NASDAQ. I posted earlier about how I took this trade this morning. It was a very fast trade, 5 1-minute candles from entry to take profit, which is awesome. And I'll go into all about why I took this trade and what I missed out on after, and we can look over. Actually, there's a few missed trades between yesterday and today. If I have time for, I'll get into. So, starting off, why did I buy this level here on NASDAQ? And quite simply, it was a Type 3 false start liquidity grab setup that I talked about in my opening range video the other day. If you need a quick review, let's just take a look here at the side-by-side S&P on the left, NASDAQ on the right. So if you look before the open, clearly we've had this kind of decline and this push up. The first thing I was looking for before we opened was there any divergence that would catch my eye? Because possibly we could see if there was a type 1 setup, but clearly everything's looking the same. So nothing caught my eye with that. And then it becomes about type 2. What is the market going to do when we open? Is it going to reach for some sort of liquidity and then reject the other way? You know, if the market was like down here before the open and then at the open shot up and took this high, then that would have been a setup that I would have been maybe considering. But again, none of this even considers the higher time frame, as I'll get into in just a minute. Higher time frame was showing multiple bullish signals, so it really wasn't looking for any short setups in general. So when I saw this type 3 on the 1-minute chart, I was very interested to get involved with it. And first things first, at the time of the market opens, the very first thing I noticed was this strong displacement on NASDAQ. Very clean fair value gap. And clearly we've been kind of trending up a bit, react off of some sort of discount level here, and then at the open, an immediate rally. So first thought for me was, okay, are we going to get some sort of false start? Is the market going to come down? But then I realized that we had such a strong looking fair value gap here. But then when I looked at S&P, it shot up as well, but wasn't as strong as the NASDAQ. And once I saw, actually, I didn't even really, admittedly, so I'm on the West Coast, and so the market opens for me at 6:30 in the morning. I kind of stayed up a little too late last night and got up a little too late. And actually, I was in bed. I'm almost embarrassed to admit that I took this trade from bed because it's not very professional to trade on my phone from bed. But nevertheless, so I saw that we had already wicked into this area here at 9:40. And at that point, at the time of that rejection, I had clearly seen that we had the false start, meaning the market shoots up on S&P, comes all the way back down, takes out that low, that swing low, the low of that candle, and then displacement the other way. And on both charts, you can see that we're shooting up with a lot of energy. And so once I saw that we had this displacement here, and then the rejection with the divergence, and then like I'm about to get into about on the higher time frame, I set my order here. Let's go back to this chart here. I set my order here thinking that there's a chance I'm not going to get it because price was like kind of up here when I set the limit. And I was just like, well, I'm not going to chase it. If it comes back, great. If not, then, you know, I have only myself to blame for kind of staying up late and getting up late. Anyway, I got the test again. The market came down. I set just slightly above the gap just to try to ensure that I would get filled. And then, yeah, just shot straight to target. Now, what I wish I had done, and I was really close to doing, but I just decided to play it cautious, was the market comes down again and at multiple tests here. And I thought about it here and here to maybe rebuy again, because really the same trade is still valid. We haven't hit 10:30 yet. I didn't see any reason for 10 a.m. to be a reversal. I talked about my video how 10 a.m. sometimes could be a reversal, but there's just a lot of bullish signs on the higher time frame. But because it's just a week that's known to be somewhat unreliable with FOMC and non-farm payroll this week, I had my 2.5R, which is more than enough for me, and I was just going to be content with that and not try to really push it and give anything back. So I decided not to engage here. And then, of course, the market just continues the rest of the day. So it is what it is. But let's zoom out and walk through what made me bullish today. Actually, before we go on the hourly, let's jump all the way out to the weekly. Now, there's really no weekly level here that I see that's valid for me in terms of a support, except for this one, which is a little far away. And, of course, I would have been looking for that, but I cycled down just to see, because I don't see a huge difference personally between a 3-day and a weekly. If I see a really compelling level on the 3-day, I will be aware of it. I will mark it on my chart. And that's what I did. If I go to the 3-day chart, you can see this volume imbalance. And it's a pretty significant volume imbalance if you look at it. So for me, I was like, okay, this is a level I want to have on my chart. And when I looked at the daily chart, particularly Monday, I knew that we had sort of these daily highs here. We had this imbalance. But because I saw on the 3-day chart that we had this volume imbalance just below those levels, I was not surprised to see that Monday was a pretty aggressive down day with respect to those daily levels that were, I think, if I go back, the daily level, we had one here. So typically, not even typically, I was looking for a possible bounce off of this daily level yesterday. But knowing that we had this 3-day in volume imbalance just beneath it, and also knowing that it was a Monday and that if you're bullish, that can be like the Judas for the week. So I was, looking for possible buys here, but clearly you can see, I'll go over yesterday what opportunities I missed on yesterday, but I wasn't going to force a buy off of this level, knowing that we had this level right beneath it. And so when I woke up this morning and I saw that not only had we traded into the volume imbalance, now I didn't love that it kind of really gone this far below it, but if you look at just the order flow on the 1 hour, how do you know when we're changing gears back bullish? Well, it's pretty clear that when we're in a short-term downtrend, let's say on the hourly, like we are here, we expect to see up-close candles resisting price. So as long as up-close candles are resisting price, we're in this downtrend. And then only until we violate up-close candles should we, you can see there's one here too. Here's up-close candles. We're going beneath it, where it's acting as resistance. And once here we impulse above it, that's what first sign to me that, okay, the market is shifting and we're probably going to be bullish. Now, not only that, do we have that? Let's get rid of this. We're now above that 3-day volume imbalance, and we have a nice close above it. And we have this, that we've broken structure. And then we also have, as you can see, this daily level. So why is that an interesting level? Well, this huge candle right here that wicked into this imbalance and then expanded higher, producing this gap here. So this candle is an area where I would expect to have some sensitivity. And again, look at time of day when price comes into it. So notice how yesterday it's coming into it the very, very end of the day. That's not a time when we trade or when I trade. So, the fact that it's like running below this level and then, in London session, I guess it retested it as resistance, then it comes down. And then it happens to be that right at the time of New York Open, New York Stock Exchange Open, we've reclaimed above it. So now we expect this to be support. We have the volume imbalance and we have the daily level. So two things right there that suggest higher time frame bullishness is kicking in. We also have the order flow changing on the hourly, breaking above this candle. So this now serves as basically a breaker. So this is the up move before the down move that took out these stops right here. This is not the daily low from last Thursday, but it may as well be because it was the session low from New York session after this big, or prior to this big run up here. So to take the liquidity below this low, shoot up aggressively, creating this imbalance even, which I don't know. No, not at the time of, we didn't know that this was an imbalance at that time, although there was one down here. So again, impulsively breaking above this. And so like this was a very obvious level to look for buys. Now, with that said, the reason why I was still a little bit cautious was like what I said about the news events for this week, and then also the fact that we did have this Asia high. I use this as the Asia range. This is the indicator I use for that. If you care to see it, you can do other things with it, but I just use it. I like the way it looks for the Asia range. And there was still in the back of my head, even though it was a low probability chance, there was still a chance that we'd kind of run below the low of Asia prior to London and New York. We shoot up, and then right before New York, I thought there was still a possibility that we could just take this high and then kind of retreat back into this range and then kind of go sideways before tomorrow, which I believe is FOMC tomorrow. And, a lot of times I've noticed that when we have FOMC a following day or the day of, you'll just get a lot of sideways. So I did think that was a possibility, which is one of the reasons why I didn't want to push this setup. So that's that trade. Hopefully that recap makes sense to everyone. So what was yesterday all about? We were drifting lower, but we did have a potential buy setup that I passed on that would have worked. Again, same reasons, just not. I had a good week last week, and I'm not looking to push it this week with all the news events. But at the open, we had this liquidity grab. Let's see, is this 9:30? Yeah. Okay, so this was New York Stock Exchange open yesterday, and so it was just a 4-hour point of interest. So before this candle formed, this big down candle formed, so we had an impulsive move that originated from here, and price was retesting it for the first time. So I was definitely considering longs here, but it was too conflicting. We broke clean break of Asia low. We had this imbalance right here, and so I didn't really want to long or short it because it was a Monday. I was just, again, not super clear to me, but I should have longed it because there was one extra confluence that if I had on my chart at the time, I would have been a lot more comfortable longing it. So let's see, what is this? So this was a type 2 liquidity grab. You can see market, NASDAQ went up first with the others, but then shot down, took the liquidity. So we had this divergence. So this was a type 2. You can see at the same time that NASDAQ is making a lower low, S&P is making these higher lows. So that, to me, combined with the higher time frame point of interest, suggests that NASDAQ is, this is just a kind of a Judas swing. And then again, we can see that we have this displacement up. So let's go back to this. So like I said, I was kind of conflicted on it. But then after the fact, I decided to look at the monthly chart. And look what happens when you mark this December. So yellow is the December monthly open. Now, if we go back to Monday, at the exact time, there, now you can see it. Once you got this impulse here with this displacement, if I had seen this monthly level right here, that would have given me that extra bit of confidence. I mean, I'd like to think it would. You never really know, but I was kind of on the fence back and forth, being like, should I buy it? Should I not? Should I stay in? Should I stay out? I just had, a little bit of conflict, but if I had seen this monthly level right here, it would have put me over the top. Now, why do I talk about yesterday? So the reason why is because fast forward to today in the afternoon session, you can see also, so the morning trade was here, and then price shot up and continued. Let's get rid of the open from yesterday. So I did take a second trade. It was a lower risk today. I did get stopped out on it. I would take it again. The trade was this. It was essentially here. It was actually kind of a cleaner play on the 2 minute, I want to say. Yeah. Clearly you could see the breaker a little bit more cleanly here. So the breaker, up move, down move, took this liquidity, filled this imbalance, shot up, broke this structure, came back down, filled this in, shot up again, created this gap at the level. So I was interested in buying here. And then the market just did one more push lower here. Then it reclaimed it. And that would have been, so I was a little early. That just happens sometimes. But this would have been Obviously, I could have, if I wanted to push it, I could have taken this one, but I just decided I was done for the day after this. After this loss here, this would have been, I mean, this is what I was expecting to happen here. And it just happened a little bit later. I'll have to look at this over the weekend to see if this was something, just spend more time analyzing if this is there's something I could have seen about this that could have maybe kept me out of it, but I don't know. I mean, it is coming up here and coming very close to the highs, but then you have these equal highs here. So I did think that, it was after lunch. If this was during the lunch hour, maybe this is just right at the beginning of lunch. So maybe I should have waited the first 30 minutes after lunch. I don't know. The first liquidity grab after lunch. That's the only thing I could think of is, yeah, I'm not really sure. I mean, it is on the 4-hour resistance level still. So you can see that it could have provided a little bit of resistance. Yeah, I'll have to look at it. I don't know if anyone has any opinions on it, but again, it played out here. I could have just waited, I guess, for a bigger displacement, a bigger structure break. Either way, all good. So that's the point about these monthly levels. I don't know if everyone looks at them, but they're really, really important. I use them all the time. And you can even see here, this one here, monthly. This is, I really like these types of ones. 2 down candles, let's say. You can see that the high of the week so far, or this was from Friday. Again, this isn't a trade I would have made, but again, just look at how price respects these monthly levels. Comes down even here, tries to hold it as support, breaks below it, comes back above it, taps this gap, then breaks below it, rejection down, and then now we've reclaimed back above it. So that's it for today. That's all I got. That's what happened. I'm keeping an eye big picture on this volume imbalance on the daily right here above price. I do feel like we are still in a range. And even though everyone's feeling quite bullish right now, the monthly candle just closed. And all we're doing is going up, down, up. We haven't really broken out of this consolidation. So I do feel like we could just spike up into this volume imbalance or this imbalance here, and then rotate back down, possibly to all these lows down here even. So I'm not getting exuberantly bullish right now, even though I've been buying and I've been bullish this week. I'll probably still buy up until hitting this, especially since the order flow seems to be shifting here. But we'll have to see. We also have some areas up here. This volume imbalance I'll keep an eye on from the market open. So anyway, that's it for today. I hope everyone has had a good week so far. And until the next time, keep grinding.